All right, this is Jeff Mackey live. I'm Spencer Israel. That guy is Jeff Mackey. And Jeff, let's talk about these consumer stocks that just cannot stop going up for one reason or another every single day. There's a group of these names that we've been talking about, and it's just the same story every day. They go up, they go up, and so they can't stop.
Yeah.
And there's not that many of them, but there are enough where it made us go, what's going on here?
Just
Right?
because it resembles a lot of the squeezy squeeze action that you got going on techs all the time, right? It's only this is kind of a more traditional model of it. You have a bunch of names in the consumer space where they weren't supposed to do anything. You had this whole K-shaped economy we talked ourselves into, and no one was going to buy anything, and no one was going to. And man, that is just getting torn asunder as a theory. Just every report comes out and it's like, well, Amazon had 7% comps, but they're really good. So that was probably just a one-off thing. And then Cheesecake, which is what you're referring to, I've got a chart of that. That was glorious because everyone kind of was thinking, it's up 50% for the year. What are they going to report? What are they going to say? There's no way, this is too expensive. No one's going out to eat. And they one by one absolutely assaulted every single short thesis that you could possibly come up with on the call. Inflation didn't matter. Traffic was up when traffic and comps are up, because the first thing that the people who are short all the time and just never really make money, it's, oh, it's just all inflation. It's all inflation. Two replies to that is one, who gives a, okay, earnings were also up, so they seem to be passing that along just fine. And two, if the traffic's up, more people are going. So I guess every place should raise prices, because apparently that just makes demand go berserk. Or something else is going on, and this is the one I'm betting on, Spencer. As you know, maybe the consumer's not dead, and maybe that's going to create some wild ass opportunity in some
Well,
of these stocks.
and this is the funny thing is we're about to talk about a few stocks that are up tremendously in the last few months, and yet it does seem like no one is talking about them. And I know it's that in and of itself is a bit of a misnomer. We can't know what everyone is talking about at all times, but we only know what our algorithms serve to us. And I can tell you, Jeff, that I basically never see anybody talking about this group of names for one reason. I don't know why. I have my theories, but this is just not an area of the market that people are paying attention to. But if you want to make money, then look no further. Then
Well, I mean, and as a group, Spencer, when people are talking about them, is usually the time to bail. Like once this goes mainstream, once our wives start telling us about Cheesecake Factory and they heard that it's really hot right now, it's probably time to sell. That's what is now called the on holdings rule, in honor of on clouds and what happens
yeah,
when the momentum dies. But it's, you're just seeing these stocks that no one believes in, and the consumers behaving quite robustly, actually, in the face of all these reasons not to. I mean, Cheesecake Factory, it's a short for a reason. And the thing that's unique about why these things are well, the price action for one, they reported terrific numbers, 5.8% comps. That was fantastic. And so these are all I made a little checklist of the bear scenarios. Traffic was higher, so that surprised the shorts. 50% was a big move going into this number. So people had a high expectations. They guided higher, so it wasn't just a one-off. The consumer, what we're seeing consistently is the only companies blaming the consumer, and that was perhaps the most chilling thing on the on cloud call yesterday on holdings, was they blamed the consumer a little bit. That's always just an enormous red flag. But Cheesecake Factory is like, I don't know how the consumer is, because we didn't pull the people who didn't come here because we were too damn busy serving the enormous line of people waiting at the Cheesecake Factory to pay a pretty large amount. And, up 50% already, no one gives a crap. So you can see that original pop, which is probably what the fundamentals warranted. And then you see the part that's so delightful for you and the other longs, where it goes up about 2% a day every damn day and just never lets the shorts out. I've said it before, I'll say it again. Don't short consumer companies with low multiples that are having, positive comps. Like, people are going there. These there's plenty of good times to short consumer stocks when comps and revenues and earnings are all rising. It is not one of them.
Yeah. So to your point, there are a lot of reasons to not think that this stock would have a good post earnings reaction. If you go look and just look at what Cheesecake Factory had done, so they reported earnings on the 28th or 29th of July, and the stock was up 50% over the prior 2 months into the report, right? So typically you would think, okay, it's up 50% in the last 2 months or so. That's pretty damn good for Cheesecake Factory. I'm guessing this one's already priced in. Well, you guessed wrong, right? Now,
Yeah.
there are other factors at play here, as you mentioned. We did just get updated short interest data from FINRA, I think yesterday or the day before, and it is still high. It's not quite as high as it was, but it's still in the
No,
20% range.
because they killed about 5% of the people that were short out there. They
Maybe,
got carried out in a box, so they
maybe,
couldn't
maybe
cover.
the
People who are short like this, if you've been short this from 60, you've got your GLP-1 theory. You've got your America doesn't want to sit around and eat these expensive. You got no one's drinking anymore. Cheesecake Factory makes a ton of money off drinks. You've got all these really smart sounding feces, which have just sent you straight to the poorhouse hell. It's honestly, I would, I'm not, shorting Cheesecake Factory is probably one of the few experiences I would rather go through than actually eating there. It's not my kind of place, but man, a lot of other people, no judgments here, and it is cooking with gas.
yeah, so I went back and I looked at the best rolling 2 month or I did 1 month, I did 2 month, and I did 10-week returns for Cheesecake Factory since it IPO'd 34 years ago. And the period that we are in right now, from the beginning of June to now, is it's the best 10-week window for this stock outside of COVID craziness, like the COVID lows
Yeah.
and the throes of basically the bottom of the Great Recession in the spring of '09, right? Those are the only periods that had better 10-week returns for the stock than this current period we're in right now. So this is like unheard of basically in normal times. Like the only times that Cheesecake Factory is this good is when the world is ending, basically,
Right,
right?
right. And it's the Cheesecake Factory. This is
Right,
like a few years ago when Build-A-Bear went on a heater and
right.
everyone bet against it the whole way and they just kept expanding. These stories end. This is not a call to go out and chase cake.
Oh,
It's a
not
call
saying
to
that. Not saying
no,
that.
it's because this is going to end, if not in tears, then in a little bit of whimpering. But so does a big meal. It's that's fine. Just undo your top button and kind of lay back and just go, oh, that was a nice Cheesecake Factory. I missed the top there a little bit, but that's okay because I'm just gluttonously full.
That's a
And that,
great analogy. This rally is going to end in the exact same way your meal, all of our meals at the Cheesecake Factory end. And that
yeah,
is feeling overstuffed, unbutton your pants, um, take some profits, walk away gluttonous and fat and happy. Right.
and not to be crude, but stay away from the vomit trough. You don't want to get rid of the whole meal. Take it home with you. You paid for it. You
Yeah,
paid good money.
that's right. Just remarkable stuff here. Credit to Sean McLaughlin, turned me on to this, not for the short interest or anything like that, but he turned me on to it just from the setup a few months ago. So it's been a nice trade. But I want to talk about some other names here. Speaking of restaurants that you wouldn't have thought are doing a whole lot of anything that no one talks about, no one talks about Brinker International, home of Chili's, also, I believe home of Maggiano's. Do I have that right, Jeff? I think I
I
do.
possibly, I don't know. Right now, what it's busy doing is digesting the bears because this was another one where and really killing the entire K-shaped economy thesis. Totally different company than Cheesecake Factory, completely different experience, completely it's just a societally turned down. They're trying to impress you a lot less than the Cheesecake Factory. It's more just a hey, would you like a double with that? We serve doubles because every hour is happy hour here at Chili's. And you know what? Low end shopping just fine. Going out to eat, having huge gluttonous serving sizes, no matter what their GLP status is. And just huge comps. And so, the K-shaped economy people were hiding in their Cheesecake Factory and then saying, well, at least Brinker will be a disaster. Chili's is huge too, almost to the exact same degree that we saw from the higher end Cheesecake Factory. And I know all the bougie people are like, oh, Cheesecake Factory is just not, it's twice as expensive as Chili's. And both of them crushing tells you again that the consumers pretty much, if not strong, about the same across the board. And it's not bad.
I'm just remembering that in the last year or so, I've read, I guess you would say they were bullish articles in the Wall Street Journal about both of these restaurants, Chili's and Cheesecake Factory. So um, they're on it over there at the Journal. But yeah, and they do own Maggiano's. So great. It's a great time to be a gluttonous eater of huge meals because the stocks take the profits and go go eat a lot of food is I guess what I was saying. But
What gives the what's making these things hang on is that they're still not that expensive, and particularly the stock we're going to talk about next. It moves
that's
in 40,
true.
50% kind of chunks all the time. It's not a bad company. It's they continue to execute. The forward estimate is pretty reasonable. It's just, it just goes higher. It's not giving you a short thesis. It's not giving you what you need. From the short side, merely being expensive is never a good short idea, but it's not even giving you that. And so
Yeah,
again,
well, it's funny about E. E's got a forward PE of like 18 and a trailing PE of 21. So yeah, that's I mean I
and their biggest division just comped 5-8%. I refer back to my comments from just minutes ago. Don't short these. There are better places to short. Under Armour's out there existing. Nike goes
yeah.
down every single day. This is there's a lot of dispersion out there, folks. You don't have to just lock yourself. You don't have to lock your ski boots into Brinker and ski all the way into hell on that bad idea.
Yeah. All right, here's another one. Let's move on from the restaurant theme. Actually, let's go to the other end of the spectrum from gluttonous eating to attractive women in lingerie, I guess. But
You can have both. There's no judgments here. We live in an open-minded society, but
that's
this
true.
is another stock with a lot in common. Not that expensive. No one believed it should have given it back. We talked about it after it spiked. I went to the store. We got lucky in the portfolio before it went up. By all accounts, it kind of should have given something back, and it really didn't. It got to 90. We joked about, stocks that go to 90, always go to 100. uh, you know, People just dismissed it as hackery, which it totally is. It was right in 3 days because it's always right. I don't know. You figure it out. Ours are not to understand the mystery of faith. But that stock going into earnings on an absolute heater, still not super pricey for someone performing this well. The CEO there, for some reason, continues to be wildly underestimated, and people love to short it. Another one where most of these stocks, if not all of them, I've kind of argued with smart people who are short, and that in this case sort of makes me feel fine.
This one, I mean, all credit to you because you've been pounding the table on this one the entire time, all the way up. And I think this is like the best performing discretionary, or maybe not the best, but it's one of the best performing discretionary stocks, just period, this year. Like not even in the S&P, just like overall. It's
It's
just
been pretty happy. It also went from 14 to 47 a couple times last year, which was a strange lap.
yeah.
So, opinions vary quite a bit. They took their CEO from Rihanna's company. People were concerned about that, but she's proven to be an absolute kick-ass CEO. What you want from a CEO is a little brazenness, a little boldness, and then you want them to go out and do exactly what they told you they were going to do. And that's what she did. And the stores look much better. The stores look much better.
The only discretionary stock that is a small cap or larger that is had a better 52 weeks than Victoria's Secret is this stock XMax. It's a furnishing company. So Victoria's Secret, other than that, is the best performing consumer discretionary stock in the last year. Just remarkable stuff. It's up 320%. Craziness.
It's beautiful. It's
Yeah.
beautiful, and you don't have to get there for all the ride. You just got to get on board at some point. And again, it's will it end in tears? Not that many tears, just because there's not that far for it to go. This is one I was talking about before that is perennially pretty cheap. I don't know, what the big thesis is here. Everybody knows what Abercrombie and Fitch is. It's a two division company, almost equally split between Hollister and the Abercrombie brand name. There's no earthly reason this should be making 40% moves like this. It's reported kind of the same quarter that it always does. Abercrombie, the rap on them is they can never get both divisions working all that well together. It's either a Hollister market or an Abercrombie market. What is torturing the bears, and it's this stock is finally pausing a little bit, certainly overdue. But going into numbers, I wouldn't bet against them because it's again, we just spent 5 minutes talking about how the K-shaped economy is collapsing. If customers on their high end and the medium to low end are doing well together, that means Abercrombie and Hollister are doing well. Abercrombie right now is expected to comp pretty much negative. So the bar is low, continues to be low. I see in the chat someone's asking about Target. Huge stock run. The expectation's still low. So I'm not sure what to make of that in terms of a stock. I think they're going to just pound a sandhole into estimates because I think the estimates are way too low. Target is supposed to comp 3%. If they're going to do better than that, whether or not it matters, I don't know. But Abercrombie, I can tell you why I'd cover that as a short, because if Abercrombie comps are even decent, I'm sure Hollister's doing great, and now all of a sudden you're short a $2 billion company with 10 times forward earnings. Why are we doing this for a living? It's time to make some life choices.
Abercrombie reports in 2 weeks, actually 2 weeks
Yep.
from today. Should mention that.
The 26th. The 26th is a big day. William Snow, Abercrombie, Victoria, I believe, all report same day.
Yeah. That Abercrombie chart, as you note on your chart right there, is it's almost filled that entire gap. I personally have always liked the psychology of the 50% retracement. So you take the high to the low, and that 50% was $13 ago. So we are long past that. In
Yes,
Abercrombie.
yes.
But
We're a little stretched, but it's again, I being stretched. So was Cheesecake Factory, and boy, did that not work out. I mean, it's these are
regarding the question about Target in the chat. I know Jeff just put on a new options trade related to Target that I believe is going out to his members later this afternoon. So you have to, if you are a member of the Mackie portfolio, you have to check your inbox in a little bit. I believe that trade's going to hit your tape here shortly. So Jeff does have an update on the Target stuff. And then Jeff, I got to admit, I've never heard of was it Stussy? Is that what it is?
yeah, I'm not sure. Southern California surf store. That's what I'm hearing. They they come and go. They do fine. Tilly's is the related public company that you can play with that. They're kind of another one that the stock is all over the place, rumored to be dying, and I see new Tilly's being opened every place I go. Something's got to give on that. And so, surf culture comes and goes. The existence of vans is proof that these things never really go away.
Would love to hear Jeff's take on Shake Shack. Let's pull the chart up of the Shack. There are beauties in the eye of the beholder. There are things to like about this, and there are things to not like about this. So, what is your take?
I mean, if you bought it in the last 3 weeks, you're good. Starboard is really, really good at that turnaround thing. Those are the activists you want on your side. What you don't want on your side are the people who are currently kind of managing the Shack operation right now. So, we'll see. There's just better places to be. There's so much stuff that's working so well that I don't want to get necessarily involved in sort of a protracted fight, because there are companies that are just kind of getting themselves in order. That was one of the highlights of Victoria's Secret's last time they reported, was they pretty much opened the call and they just said, activists, you can kind of go kiss our ass is what you can do, because we just absolutely bootstrapped estimates for taking up guidance. And, that'll be the end of our conversations. I don't think that you're going to necessarily see that from Shaq, but that's your best outcome. Otherwise, it gets into, just a long lasting kerfuffle. And
Right.
Jack really has to kind of figure out its raison d'etre. It's why does it exist? Is it a great short here? No, it's down from $150. Clearly not really, but sometimes you can just walk away and let them have a shot at it.
What I was going to say is you do have a pretty clearly defined entry and or exit point, which is right here. Like we're
Yeah.
kind of at this this incredible area of interest, which is obviously the recent high from May, where we kind of failed a few weeks ago, and basically like 72, this whole 72, 70, 75 area, like anywhere in that range, like we're in it. If we break above it, that's awesome. If we fail, that's no bueno, right? So this is like we're at the scene of the crime, I think. So
you can do anything you want as long as you have an exit plan, which
right.
is a really good idea in these things. I mean, kind of look at the portfolios, historic holdings for good examples of needing an exit plan. We tried Lulu for a few bucks, got out of that. That worked out just fine. On gave us a great out up above 50 when they reported earnings. That I'm certainly glad I'm not the athletic shoe industry long right now. It's these things change. So you just got to move along. And right now, again, expectations are pretty low and everything is coming up really well for consumers. I went to the schools. They taught me how to be educated and sound smart. If you want to debate why the consumer is strong, I've never made money doing it, so I tend to get out of practice. But it's better off just watching how they're behaving rather than what they say.
That's sort of what I've learned is if you want, you can learn how to sound smart by quoting financial statements and balance sheets and all that jazz, or you can just say, "Hey, look, line go up," right? Line go up.
And people kind of don't even think about it. It's just everyone's running up credit card debt that they'll never be able to possibly pay off, and they're going bankrupt, which is essentially just saying everyone's dumb except me. I'm the only one who understands home economics, and just that's how you explain the macro data of 75 million odd Americans that fit these demographic groups we're talking about. They're all stupid. Yeah, I'm not sure who you hang with, but that's not a great economic theory.
I saw the headline yesterday. I saw the headline yesterday. Maybe you did too, right? That total U.S. consumer debt is like $1.25 trillion. But the thing about the credit card debt is, as long as people are spending money, that number will never go down because people are spending money via credit. And yeah, they accrue debt. That's the way it goes. The only way that number really goes down is if like the economy writ large contracts to the point where people stop spending money. And that's a much bigger problem to have than individual households racking up credit card debt, which is not good. To be clear, I'm not in favor of credit card debt, but the total aggregate number is really never going to go down ever unless we're in a recession. And by that point, who cares? Because we're in a recession.
Right. Like a lot of things in life, it's good to actually be a student of it. It's good to understand the causes and the reasoning for it. But, it's all hypothetical except for at the extremes. Movie like A Big Short made it look like you've discovered this incredible fact that no one else has ever noticed. And it's just, holy crap, we've raised this, a generation of cynics with a stock market that's gone up 11% a year. Dude, for the last 150 years. So yeah, okay. Why don't we just let them run?
Movie, and I love that movie. It is one of my favorite movies of all time. And that movie poisoned people's brains because it let everyone think that it's possible to discover this great truth that no one else knows, that only you know. And in reality, 99.9999999 times, you're not smarter than the market, right? Even those guys, they were wrong for years, and then they were right, but they were wrong before that, right? They were early. The movie made that clear.
And
So
being early, it was super expensive to borrow against that. I knew plenty of
right.
people talking about that. We would get, entire surly, cynical, wise ass New Yorker finance people conversations would be discussing nothing other than the fact that housing was going to kill us all. How
Yeah.
you trade that was a little more complicated.
Yeah.
And then once the trade was on again, as we talk about, you don't stay at the party in specialty forever, but you don't try to catch the top either. The people who tried to just short the whole world in 2007 got carried out in a box. And once
Yeah.
it did break, when I was on TV saying my favorite positions were cash and fetal, the S&P went down another 45% from there. It was already down 20%. It was, I mean, in 6 months or something. I mean, that was 2008, and the market bottomed in March of 2009.
Yeah.
So,
And
you'll have plenty of time to the downside, is my point. Once the consumers all start declaring bankruptcy and everything's going to hell in a handbasket, it'll be a time to sell your stocks.
yeah, and volatility goes both ways. As I mentioned when we were talking about Cheesecake Factory, the best 10 weeks in the history of that stock were the spring of '09, like the bottom of the financial crisis. The market bottomed spring of '09. Cheesecake Factory was ripping. And it wasn't just that. Lots of stocks were ripping, and they were doing this, right? Every other month, right? So good luck surviving that, right? It's really, really hard.
Yeah.
So and we're getting way off topic here, but
Oh,
the
yeah.
lesson of that movie is don't try to call the end of the world, because even if you're right,
Just enjoy the movie.
yeah, just enjoy the movie.
Bears don't have yachts. Go out and have fun.
What are we talking about? All right, we've lost the plot. That's okay. This is fun. I enjoyed this. Thank you for coming to my TED Talk, everyone. We'll be back next week with Jeff Mackey. We'll talk about whatever's happening in consumer land. I'm sure there will be stuff to talk about.
We've got so many earnings to talk about. It's I mean, it's just going to be fun. It's just going to be a party. The next 3 weeks, it's the final major of the year. It's Glory's last chance. It's earnings for the third quarter.
That's it.
As goes back to school, so go the holidays, and so go the entire year.
Back
That's
to
a
school
retail
season.
tourism.
That's right.
Yeah.
All right. Enjoy, everyone. We'll see you next week.